Okay, welcome everybody to this evening's ACY Securities webinar. My name is Duncan Cooper. Tonight's webinar is a review of the recent Forex trading patterns, looking at last month's trading. What could we learn from that? That's tonight's webinar. Tomorrow night we'll be doing live Forex market review, 8 PM Sydney time, just to give you a heads up what's coming up tomorrow. So before we get into tonight's webinar, if everybody can read through the risk disclaimer. All right, we'll move along now. If you don't know me, then my name is Duncan Cooper. Senior market strategist and trading mentor here at ACY Securities, and I'm a full-time Forex trader. Been trading now for more than 15 years, almost 20 years now in the Forex market. I think it was 2005 I started in the Forex market. Mentoring for more than 10. If you want to contact me, my email's there, duncan.cooper@acy.com. Through the week, you can connect with us at the website, acy.com. Go to the market news tab or our YouTube channel, ACY Securities Australia. If you want to connect with me personally on social media, just head over to my Linktree page and you'll get all my connections there. And if you want to get access to my charts, layouts, templates, then just contact Nathan Bray. His email's there, but I'll put it in the chat for you. So any questions about a demo account or live account or anything to do with webinars, Nathan will be able to answer any questions on the phone. His details are there in the chat. All right, so tonight's webinar is about looking at what patterns we're setting up last month on the charts. What could you have learnt in hindsight, or what can we learn? And can you take anything forward to this month to help you with your trading? So let's get to the charts. Now, I've looked for patterns that I use and discuss. Just trying to get my charts to come up, if they'll come up. There we go. Just want to confirm that you can see my charts okay. Sometimes when I swap, I think that's fine. Sometimes when I swap screens, it doesn't seem to want to show. All right, so on the pairs I'm going to review, I put a line in just identifying where the previous month started, and going to look at the higher time frame kind of patterns. I'm not going to get too much into a 50-minute chart. Using the larger areas of support and resistance and price patterns. Okay, now I'll start with the Aussie yen. And I said this at the start of the year, or pretty much at the end of last year into the start of the new year, that it's going to go to the weekly chart here. You want to be watching the 2023 high, which is here, the 2022 high, because when we test the yearly highs or the yearly lows, but in this case, the highs, we'll often get a reaction. So we actually came up to test last year's high and the year before's high in the month of February. So let's just draw in 2023 high here. So when we're approaching a yearly high or a yearly low, but this is obviously a yearly high, I always have the reservation that we will, we can trade above, but the reservation that we may well then see a reversal back down. And of course, we've had a reversal back down. So, on a very large time frame scale, here's the monthly chart. We could be forming some form of double top or even a triple top here across these yearly highs. This could be the high of this year, but there's two yearly highs here. So maybe a little double top just here, or maybe a triple top. So how could we engage? Or of course, it's difficult, I'm sure, for a lot of people, because they see this as an uptrend and they go, well, I'm short an uptrend here. But you just have to get into the idea of how structure works, especially from a yearly high perspective. So now, just from a day chart perspective, when we close actually below this level the next day. All right, you could have simply sold there, putting your stop above the high. So, selling, stop just goes above the high. Now, if we did that, we're obviously in profit at the moment. The trade may be still running out because we may have a long-term target. We could be targeting down here, or even further down the track if we think we're going to get a major reversal. So at the moment, the trade's still not really on. It's just starting to form a lower top here. Now, if you wanted to get in on the 4-hour chart, then normally what I look for is some form of drop, then a rally back up kind of to a 79% level. So it's a 79% entry point, but market doesn't do that here. It chops around a little bit at the resistance level before moving down below. So the way you could have gotten in is waiting for a break below, a clear break below this support. So on the 4-hour chart, if we're just drawing the swings, we are down, rally. Then we put in a lower top and we move down below here. Okay, so this is where you could look for a fib retracement and just look to trade at resistance here. Because now, once we break clearly below support, you should expect it to become resistance, and quite clear it becomes resistance here. So what you could do is draw a fib in. It's just a simple fib retracement pattern. Now, you could have been looking to trade at 79% level because that's fractionally above, but it doesn't get there. So if you did look to just trade here, like a little 79% retracement pattern, you would have missed out. If you were looking more at the resistance level for a rally retest into the 62.79% area, then that would have worked out just fine. But personally for me, I would just trade here at the resistance level. And options for putting your stop could have been just above here, or above the final high, or you could have used my 100 pip entry technique by simply going, okay, I'm going to sell at this resistance level on the retest, stop goes 100 pips above. So stop would go at 99.58, which is, I don't know, it's up here somewhere. It's further above here anyway. So wherever you put the stop, it's above the first lower top or the final top or 100 pips above, price has not come up and tested that level. So at the moment, that trade would be up round about, has been up 100 pips, slightly more than 100 pips today at the moment, but it is just having a bounce here at the moment. So that was really, the major level on the Aussie yen in February. We just get rid of those lines. And whilst we're not discussing March, because this is a review of February's trading, it is worth making the point that, yes, we've failed at the 2023 high, the 2022 high, and, to the monthly chart, we could be forming a major double top, kind of triple top across this line. We may well come back up for retest. So whilst we've failed, we may well retest in March. So it's worth, waiting for, if you're not in, if you didn't, I know some people did get short here, not quite sure how they got in, but I'm just showing you how you could have gotten in. We may come up for a retest. So it is still worth having 98.58 quite clearly in your mind, because we may retest that. So that's the Aussie dollar. All right. Patrick, I see your comments. If I have time, I'll have a look at gold. If I don't, I'll look at it tomorrow. All right. Let's get now into the euro dollar. And what I will say about the market of the previous month is there wasn't as many patterns forming. And it wasn't the easiest month because at the start of the month, we traded down. This is the start. This is start of February here on the euro dollar. And we had the job figures come out. We traded down in the early part of the month, and we actually then came back up and reclaimed the whole job figures drop. So it wasn't an easy month. We never continued down from the job figures all through the month. We actually pretty much came almost there on the euro dollar right now. Come back up to where the drop started on the job figures, which was here. You can see where price action is right now. It's retesting that area right now. All right, so let me just check my notes. So that line there is just highlighting where the start of the month was. So here's the day chart, and we're in a downtrend here, right? And we start to move back up. I'll just draw in the swings, so hopefully that gives you a clear idea what the trend is. We're down, we come down to this point, and then we rally back up. All right, I'm going to show you that that's a 79% level, or close to. and really, it was a 79% level trade with a caveat on the day that you're kind of getting into that area. There was the job figures coming out. So let me just draw in a fib and show you what I'm talking about. All right, so it just misses the 79% level here. So let's just drop down the 4-hour chart. And this was the job figure collapse here. Now, in a perfect world, the 79% trade is you're trading at 79% level. So you can have an order just sitting there. If I can get my drawing tool to work, you can have an order just sitting here, stop above the high. Now, in this case, it doesn't take you in. So if you don't get taken in and then you start to see the sell off after the job figures, just from a 4-hour chart perspective, my 4-hour entry method is a break of the previous 4-hour candle. So you could have simply traded this break to anticipate that we're fading here at the 79% level. So we've moved down, just rallied just short of the 79. And then we moved down to 127 extension. That would have been a great area to take your profit. All right, so there was a 79% pattern there. It needed a little bit of dropping down the time frames to maybe get yourself in, because it didn't quite trade at the level, and the job figures then came out and it was negative. So then you would have needed to deduce that we're maybe failing there at 79% level just short of, and then how could you get in? Well, that's how you could get in. All right, so that's a very good example. It's worth taking a snapshot, going to your own charts and snapshot in that kind of pattern, and look out for the next one that forms. Now, one of the things I want to say before I move on and just look at some other trades that were forming through the month, as we're getting into March, it's very apparent to me that what has happened since the job figure drop, and this has been happening on, for sure, the euro dollar, which I'm looking at, and the pound dollar, is this imbalance that got formed here. One of the things that I teach. Imbalances are often filled. So when we're down here thinking that maybe price is going to continue down all month, well, once we got into almost the middle of the month, we actually came back up to fill this area. So all this upward move that we've been having in more recent times was the filling of this area. And we're kind of back up to, at the moment, the start of the drop from the job figures, and we have the next job figures on Friday. So we've kind of sold off with the job figures down, and we're just coming back up to maybe the same price point that we started out from the previous job figures. All right. All right, so let me look at my notes. Next trade was on the 15th. Now, this was a failed trade. It's another 79% pattern in here. All right, if you're following the trend, we moved, let me get my drawing tool on the day chart, down, rally, down, rally. Now, there potentially was a trade in here to take a 79% trade in here. Now, I actually did and managed to get out of the trade at break even, but the reason why it fails is because of the support that it's trading in over here. Support changes the trend. We don't know if the trend's going to change at the time, but that's the reason why, if you're trading here at 79% level thinking it's going to move down and through, the support changes the trend back to up. So I actually did take a trade in there, and so here's that next move down, just drawing a fib just to show you on the day chart here. Comes down, so you could have been sniffing in here around the 79% level. There were 3 days there where we're holding, and then eventually we obviously broke north. Now, I actually got short in here. So I actually got short here, stop above. And when we came down here, I got the risk out and then just got taken out at break even. But that was another 79% pattern following the previous one. But in terms of a profit, there's no profit for me. And if you didn't manage it, it would have been a failed trade. But you don't know which trades are going to work and which aren't. It's just showing you the pattern. Some patterns are going to work, some patterns aren't. Azu, hello to you. All right, so then we're moving on to the 22nd. So later in the month, as we're moving up, pretty sure I said in the webinars that there was an imbalance that I've already discussed to the left. This drop here. So price comes up here and fills the imbalance. All right. And as well, I just need to check at the time when it's coming up. I think over here, this was I also had a fib drawn in from here as we were coming up, like so. That's the flare from this high up here. And there's a 79% level here. Now, it's quite a large top. You could have been selling up here on the 79% level. As we were coming in to fill this imbalance here, if you were aware of this range, there was a 79% level here. You could, depending on your method of how you want to employ things, you could have been looking for this imbalance to fill. So this would have been a news candle, I'm pretty sure. Comes up to fill the imbalance. You could have had an order here. Could have had a stop above here. Or stop above here, depending on how you want to manage your position. All right, now that's just used the larger kind of entry technique, higher time frame entry technique, the larger stop. What you could have also done, now if you're taking that trade and you're taking it as a position trade, at the moment you could still be in it, right? It's worth making that point that you've sold up here. This has kind of all been sideways to slightly down, and now maybe it's trying to move up, but it's still very difficult in terms of the overall direction here on the 4-hour chart. You can still be short here, stop above the high, waiting for this maybe to break long-term to the downside. The longer-term trend is clearly down. We're having like a 2 or 3 week rally up here at the moment against the weekly downtrend. Now, if you don't trade here, what you could have also done is then looked at that as a final rejection and drawn a fib down to this point. Price, you could have been looking for a 79% retracement here, but that never comes around. All right, so that's a kind of a trade I was looking for, but it never came in. Then price moves down, so drawing a fib then along this range. And I've discussed this in the webinars. Forms a little bit of a head, not a perfect looking head and shoulder pattern, but it's a 79% retracement here that comes up to the 79% retracement. So we failed here. This is a lower top to that top, coming up to form maybe another lower top to these tops. So there's a 79% level. You could have been looking to sell there. Stop above here. Now it comes back down to support. So at this point, you would have hopefully managed your trade. Doesn't come through to the target level. And ultimately it reverses back up. All right. Now, at the moment, don't want to spend too much talking about the current price action, but that high hasn't been taken out yet. So just keep employing the 79% method, looking for that pattern. Today and yesterday of this range, there's the 79% level. So there's been an opportunity here and another opportunity there today to trade at that level, stop above the high here, or stop above last month's high if you really want to. Assuming you've got the approach that you think that this is just a topping out phase and you think price is going to move back down now. This is this month's price action, so I don't want to comment on that too much, but just to show you a lot of charts I'm going to be going through this evening, or the rest of them anyway, it's still around about 79% retracement pattern because the market's rather range bound. So what we're seeing is most of the price action is, you know, very much zigzaggy. If we're getting any imbalances, and we drop like here, then price is coming back up to fill the imbalances as well. All right, so don't know if this is holding here. It's definitely moving. You know, the US dollar is getting weak at the moment. It'll get a little bit weaker this week as we're moving into a lot of US dollar news items. But I think the thing to really note is it's coming back up to where we started. Job figures drop, and we have the job figures this Friday as well. All right, now let's get into the pound dollar. To the day chart. It's been very range bound since December. All right, it's been on the weekly chart. You know, from a weekly chart perspective, the trend is down. We moved down to a lower bottom, and until proven different, this is just corrective. This is obviously a weekly rally, just corrective until it takes out this high. So at some point, if it doesn't take out this high, it's going to put in a lower top and move this way. So, but it wasn't easy because the start of the month we were moving down, and then for maybe 2/3 of the month we would be moving back up. But the trend hasn't changed on the weekly chart; it's just corrective. But that means the day trend up here is starting to turn up in the short term. So on the daily, all right. So second of a second, where was I looking? All right, I just need to go back in time a bit. This was the job figure drop, and it's very similar to the euro dollar. There was a 79% level in here. Price actually moved down to the low of that blue candle and then trade up. So this is very range bound through the latter 2 weeks of previous month. Let's just drop that down to a 4-hour chart so we can see it. All right, you can see here it's very up, down, up, comes down here. And this, you know, if you were looking to trade the 79% level, this was a job figure candle. And you could have maybe traded ahead of the job figures thinking, well, okay, I just want to trade ahead of the job figures. I'm not worried about the job figures. So if you wanted to do that, it would have worked out just fine. Wouldn't stop you out. Is that there's your movement down. This is the rally. Now, 79% level here, just above, you've got a high here. This is a false break. You have another false break of that high there. So these two areas of false break in this area, and all that 79% level all overlaps with this level here. Now, of course, it trades above this level, but at the time, if you're looking to trade here, you've got an order sitting here to get in. You're putting your stop above here. Now, when the job figures comes out, it gets quite close to stopping you out, but then doesn't, and has a very nice move down to the 127 extension here where you can take your profit, right? Now, of course, like I was showing you on the euro dollar as well, if you weren't prepared to trade until after the job figures, then once the job figures got released, you could have been looking to try and trade around the break of this 4-hour candle here, which was at the 79% point. Stop above the high. All right. So the euro dollar and pound dollar kind of almost had a very similar trade setup at the 79% level there at the beginning of the month. And as I was saying before, on the euro dollar, price action through the course of the month really came back up. In hindsight, to come up to fill the imbalance. Now, it's taken a lot longer to fill the imbalance on the pound. It's only really filling it this month, March. But the imbalance that formed was here through the job figures. And, through the month of Feb, we did come up to fill some of it here. Then we came up to fill some more of it. And maybe we haven't quite filled the whole thing yet. Don't know whether we're coming up to fill the whole thing or we're maybe starting to top out. Looking at the range of last month, if you're looking at trading in the month of March, we're around the 79% area of last month's range in terms of where price is right now, but that's current price action. So last month's price action ultimately was coming up to, fill this drop in hindsight. Not that easy to maybe think that was entirely what was happening through the month, because we did have a significant top come in here. Now, if you thought, I wasn't thinking that this was going to get entirely filled. I was thinking maybe we're going to continue down for the month, but in hindsight, clearly that has occurred. If you did think that was the case, and price action, looking at it here to the day chart, it does come up, pull back, and it holds here and puts a higher bottom in, comes up again and puts another higher bottom in. So this area here, if you had the forethought that maybe we were bottoming down here to come up to fill this area, then I'm just going to go to the 4-hour chart. If you draw a fib from low to high up, you see a 79% level here. Now, because trading down here is a little bit counter trend, you don't necessarily have to trade at the 79% level. You can wait to see what's happening here. All right, so let's say we don't take this entry here because we're concerned that we're in a downtrend, but we start to, come up, down, up. I just want to draw the swings in first of all so you can see. We start to rally back above the 79% level. We come down. Then we come up. All right, so there's actually opportunities here. There's a bit of a swing in here, but I'm just putting the big swings in. There's actually a number of 79% retracements in this movement up here that you could have traded if you had the forethought that we were going to fill this area here. And then we come back up. All right, and then we come up to here. All right, now if I just get my fib tool, this first run up pulls back to the 79% level here. There it is. So there's a little 79% trade there if you're prepared to go counter trends. Profit at the 127 extension here. All right. Then we pull back. There's another 79% level here. You could have traded up to the 127 extension. All right. Next one doesn't pull back to the 79% level. So if you're looking for the 79% pattern on the next pullback, it only comes to the 62. So if you got your order here, you never get filled. All right. Then we move up. So put the next one in. Doesn't quite get to the 79% level. So if you're just trading at 79% level, you don't get filled. And then we move up. So if you're looking for the 79% pattern, you're not quite getting in on some of these. First two, you get in. So there's been 1, 2, 3. There's been 4 attempts to get in. 2 have worked, 2 haven't. And then the next one, this gets you filled. Stop above the low. Doesn't meet the 127 extension. So you would need to manage your trade at some point. As you start to see this, topping out with 3 tops here, you probably need to realize that it's not working in terms of continuing up. However, you see there, out of 1, 2, 3, 4, 5 swings, you could have gotten 3 79% retracement trades moving up there. All right, I'm just trying to tidy my drawings off. All right, now, then there was actually a 79% retracement to the downside. If we were looking of this range. We spike up into this area here, which is a 62.7 area. So logically, you might have thought, okay, this drop down here, the movement into this area, this could be where we're maybe putting in a final top to then trade back down towards the low and break through. So we get, quite an impulsive drop, and then we rally back up. So then you could have been looking for the rally back up to sell at 79%. I'm just going to draw in swings. And then it gets a bit messy in here, but then comes down, up, down. All right. Again, looking for the 79%. So there's a 79%. Stop above the high. Gets a little bit messy in here, but ultimately breaks this low and doesn't quite meet the 127 extension, but hopefully you manage to trade to some form of profit. If you weren't trading that, but then you started to see a further failure here, and you were looking at this range, there's a smaller 79% retracement in here you could have traded. Just here, stop above the high, that trades down into profit. Then there's this swing down. So just using the big swings on the 4-hour chart. This comes up exactly to the 79% level. Comes down pretty much to the 127 extension down there. All right, so I'm losing track of how many I'm showing you. I think there was 3 up here. There was 1 over here, that's 4, that's 5, that's 6, that's 7 there. Through the course of the month, just trade the 79% retracement pattern, be it up or down. All right. All right. So, just taking one pattern, just looking for that one pattern. All right, let's now have a look at how we're going for time. New Zealand dollar, which wasn't the easiest, but again, focusing on what I'm seeing and things that jump straight out at me are like head and shoulder patterns and 79% retracements. Okay, so looking at New Zealand dollar, this is the start of the month. We were getting some support from this area through here, this weekly area here. That was 60.55. Just put the exact number in. All right, so we came down here and bounced, and we bounced up here. So there was actually 2 79% patterns in this area here, one from trading down, one trading up. So there was one here. You could have traded here, and also there's a slight little, head and shoulder pattern kind of formation. There's your head, left shoulder, right shoulder area. So you could have traded 79% area here, or the shoulder, stop above the head. And you're obviously looking to trade down towards the, 127 extension. It doesn't get there because weekly support holds. And in this area here, if you start to see that hold there, maybe you needed to jump out, take profit, because whilst you may have thought there was a head and shoulder pattern forming up here, then what starts to occur is that there's maybe a head and shoulder pattern forming on the opposite side of the market here, left shoulder, inverse head, right shoulder. And then starting to see price hold here, because on this red candle day, we don't close below the level of support. We just hit it and close, and we just come back up and hold. We move to the 4-hour chart. Then once you start to see this maybe holding on weekly support and starts to come up, then you might want to start to look for a trade to the upside. Now, you clearly could just try and click in at the 79% level, which is here. Get my drawing tool. All right. Now, if you don't get in there because you haven't realized what's going on and price starts moving up, price is putting in a few swings here, comes down, never comes back down. If you haven't got in here, it doesn't come down for a further test of that price point, so it starts to move up. But what you should maybe have started to realize is that we're moving up because this inverse head and shoulder pattern is forming on weekly support. So as price actually is moving up here, if you're cognizant of this pattern, then we have a move down this way. And then we move up. You could have been looking for a 79% retracement in this area. I just need to, not quite sure if it gets down there, but that would have been the method to employ. Is you've got a 4-hour uptrend starting to move up from a higher time frame head and shoulder pattern. So look for a 79% retracement. Now it doesn't quite get there, but I'm just showing you how to look and assess for things as you're starting to see this reverse down here. If you start to see the swings forming to the upside, look to the pullbacks, try to catch a 79% retracement if you can. Stop goes below the low, and can you ride the market up? Okay, now hasn't been the easiest pair to trade. But I just wanted to show you that 79% pattern was working there around that area of support. And there was some opportunities during the month maybe to trade that pattern if you were on, if you're on alert. All right, let me just tidy things up. All right, so head over to the dollar CAD. This was the start of the month. And maybe we'll just talk about what the trend is, first of all, on the dollar CAD. Monthly trend here is up. There's actually maybe a head and shoulder, inverse head and shoulder pattern forming down here. So, patterns are always stronger from the highest time frame. And whilst things can get messy on a lower time frame, like a 4-hour chart or even a day chart, which this pair was a little bit messy on those time frames through the month. Ultimately, if you understand there's a pattern there on the highest time frame, that pattern is overriding overall for the direction for the month. In that we have this little shoulder, head, right shoulder. This was a 79% retracement down into here on the monthly chart. And you can see that January and then February's trading was up. When you look at the price action, it was a little more awkward than just trading up for the month. But the pattern from the highest time frame, it looks very clear here what's going on. We're probably, nothing changes, coming up to test these highs up here. And then can we break out through? All right. Now, through the course of the month, the weekly trend turned up. But, just looking for the monthly chart, there's a strong monthly pattern maybe forming there. It's very much in line with what we're seeing on the dollar index as well. Same similar pattern. All right, so February started here. Came up to this higher top. Could have been looking for a 79% pullback here. Now that doesn't come, but hopefully something jumps out at you here. There is a little left shoulder here, head. So over here on the right side, you could have just been trading. Whilst it doesn't trade down to the 79% level, you just move it down to the 4-hour charts. And I can't see it on the 4-hour charts clear, so I'm just going to remain on the daily for a moment. there's your left shoulder, there's your head. So opposite, if you just trade it opposite, stop below the low, then we trade up just short of the 127 extension. All right. So it's not quite a 79% retracement, but it's a perfect head and shoulder pattern setup trading at the shoulder. If we move to the 4-hour chart, so that was this area here. I'm just going to get rid of those lines. So that was that trade here. So that was the level just there. I'm just going to mark it in with this blue line, or that line there. Now, if you didn't get in down here, what does occur is that we move up and then we pull back. So if you drew a fib across this range, you could have been trying to trade down here at that 79% level. Now, it misses by a couple of pips, but if you're on the ball, hopefully, you can maybe get in a couple of pips above. So it actually comes down to opposite the left shoulder, and then on the 4-hour chart, it comes up, pulls back, and then up she goes. All right, now back to the day chart. So we just discussed this retracement into this area here. Then we move up, and then we retrace back down this way. Now it gets a bit messy in here, but really this price action coming down here. There's a very positive candle up here, creates an imbalance on the 4-hour chart, and all this price action down here is coming down on the 4-hour chart to fill the imbalance in here. So let's just move to the 4-hour chart. So this imbalance in here. Imbalance actually, because this is an outside candle, the imbalance really starts pretty much at the low of the candle. All right, down here. And the fib range to monitor would be, that's the day chart low up to day chart high. Like so. So all this zigzaggy price action, which looks kind of horrendous, ultimately, we're just pulling back, filling this imbalance, pulling back to the 79% retracement, as well back to a 4-hour area of support. There's all these 4-hour lows here. All right. It's coming in really into a kind of an order block area where lots of support was formed here before we blew explosively north, creating an imbalance. So then price comes back over time to fill the imbalance back to the 4-hour area of support. There's your 79% level. So that's the level that you could have been trading at. So obviously trade up. Okay. So all the kind of price action I've been seeing all month has been rather range bound, filling in imbalances. But if you're just trading the 79% retracements and you've got them on your charts, waiting for price to get back there, game of patience, that was really the pattern that worked the best last month. Okay. So those are the patterns I wanted to go through with you, and hopefully it's been a good lesson on the 79% retracement. Just to finish, Patrick, you asked me about gold. So I might just head over to gold and have a look for you. And what's that pound doing as well? All right. Gold. So you're saying it is heading down after what looks like a double top is formed. It looks like it's heading up at the moment. At the moment, it's in an uptrend. The big question will be, so on the monthly chart here, we've broken above all these monthly tops to the left that we previously false broke. And we've actually put in a higher bottom here on the monthly chart. So the monthly trend is up now, the weekly trend is up now, and the day trend is up. All right, so at the moment, all I would say is this major area of resistance here that we have, just because we had a massive false break of that area, just because we're above it at the moment doesn't mean to say we're going to hold above it. What I said last night in my analysis was on the day chart that we've broken above this area. So what we would need to see now, if you want to remain to the buy side, if you want to trade to the buy side but not at the top of the market at the moment, then you would need to look for maybe correctly pull back to the broken area of resistance. Can that hold to continue up? That would be my thoughts on gold. So I don't know where you're getting the double top from, but if we got up to here, then we could have a double top for sure. And I would expect, I said this yesterday, if we got up to 2190 this month or next month, that would be a great area to watch for reversal because of the massive rejection. Okay. So that's my thoughts on gold. All right. All right, everybody. All right, so that's what you meant. So you think, can we get a double top at 2190? Well, we can if we get there and it starts to fail, but at the moment we're not there. So for sure, if this was to continue up at the same kind of rate of knots, day after day after day, the more price gets stretched, the more imbalances are getting formed on lower time frames. And then, yeah, for sure, up here at 2190, that would be an ideal area to watch for a double top. Steve is saying to me, let me just read it. All right. Sometimes I do drop down to the lower time frames when I do my review, but because the market's been so kind of range bound, then what I want to emphasize to everybody, over the next couple of months, who knows what price action is going to be doing? It could still be in this kind of range bound environment. And if we're very much in this range bound environment, if you're starting to see the 79% retracement trade setting up, yeah, you can drop down to a lower time frame to look for a tighter entry around that level. But just, if I'm going to do that on every 79% pattern that I'm showing you tonight, it's going to take me hours to go through dropping down to a 50-minute chart and look for the actual precise entry. So I'm just showing tonight the entries on the 4-hour chart. But yeah, for sure, if you've got the level there, you could be then waiting at that level for a turnaround on a lower time frame to look for your entry, if that's what you want to do. All right. So what I'm trying to emphasize really tonight is just using the day chart, the weekly chart, the day chart, the 4-hour chart is, look for the structure and the patterns on these time frames. And if you want to get cuter on a lower time frame to get in, then have the fib set up, have the pattern set up where you think it's forming, and then you can just drop down to the lower time frame for your execution. Okay. But it would take me too long. I've probably shown maybe 79% patterns tonight, getting close to, I'm sure. Breaking it down to that lowest level on every one would have taken me forever to, discuss. So, you can go back to your favorite pair and look at the 79% levels that I showed, maybe on the pound, because there's lots on the pound. Just drop down to the 50-minute chart in those areas and look yourself and identify how you could have gotten in on the 50-minute chart if you wanted to, okay, as a review. All right, Steve, thanks. All right, tomorrow, if you head over to the webinar page, I am just doing analysis tomorrow at 8 p.m. So if you want to join me, just come over to the webinar page to register, and I look forward to seeing you then. Okay, everybody? All right, have a great evening. Thanks, everybody.